Welcome guys, I'm just gonna see if where is the chat, live chat, yeah. Okay, live chat is there. Switching it on, live chat. All right guys, welcome. I've got some talking points to go through today, but if you have any questions, feel free to, let me see how all this works. This is the first time I've done this. All right guys, so I'm going to go through some of the stuff that I have normally spoken about in the past, and it kind of might give you some thinking, some things to think about, and then after we've got some stuff to think about, you guys can ask me questions, and I'm happy to kind of help you with any questions you might have or anything like that. So just to give you a little bit of, I suppose, background to start with, I've been in the property industry now for over 25 years, so tons and tons of experience. I've done an awful lot of stuff, and what I'm going to go through today is I'm going to talk a little bit just about what I've done in the past. I'm going to talk about the news at the moment and the economic outlook. There's an awful lot going on in the market at the moment, and globally, economically speaking, and I think it's going to have an impact, a negative impact, on the property market, on the real estate market, whatever you want to call it. And because of that, I think there's going to be opportunities coming up, but there's also going to be some risks, and I think you guys will need to be careful about those risks if you are an existing property investor, or if you're thinking about getting into it. I think there's a big risk that we could interest rates could jump up, and if interest rates jump up, you're going to have a lot of people forced to sell property because they can't afford the rents or the mortgages and things like that. So this is all kind of risky territory that we're in at the moment, and it happens every, it's been 14 years since the last crash, and so it's long overdue, and so this is going to be pretty difficult. Hey, I see we have Jerry on the call. Good to see you, Jerry. Yeah, it's pretty lonely in here at the moment, but what I'm going to do is I'm going to go through the news, the economic outlook, what's going on out there at the moment, the property market, what's likely to happen in the property market, in my opinion, how to prepare for that if you are an existing owner or if you're thinking about becoming a property investor. And I'm going to go through some property basics and some 6 steps that I kind of recommend that you guys consider taking, and then I'll jump into questions if you guys have any questions that you'd like to ask me, and that's it for now. So let's get into the first thing. So intro to me, I've been all around the world in terms of property investment. Grew up here in Ireland, but I have spent about nearly a decade abroad investing in America, in Spain, in the Middle East, Dubai and Doha. I also spent time in the UK, in London, and the most exciting place probably was in Ghana in West Africa, where I was involved in a big commercial deal, and that was just a market that you could see opportunity literally everywhere at the time. Anyway, it's about 10 years ago at this stage. So built lots of different commercial properties, built residential properties, have built various things all over the place. Today I'm running a big business park here in Dublin called Eastpoint, and Eastpoint is it's home to Google and Oracle and Enterprise Ireland and various big companies that are here. And so I think I've got a fair bit of experience. Most people, if they ask me a question, I usually have an answer, or at least I know where to go for an answer. I do have a podcast. You guys may be familiar with the podcast. It's called Behind the Facade. And in Behind the Facade, the podcast, I talk about real estate investment, innovation, and then the kind of the impact side of it in terms of sustainability and green and all that kind of stuff. Eastpoint Business Park, by the way, it's been here for 25 years. It's a 40-acre business campus with 38 buildings. And during the boom times before COVID, we had about 9,000 people working here. At the moment, it's because of the pandemic and work from home and all that, it's a lot less. So let's get into the news and the outlook. And really, the reason I wanted to talk about some of the news and the outlook is that 6 months ago, I had a talk kind of like this to some people in Dublin here, and I put up a load of slides, and I've just been reviewing those slides. And like, it's incredible how just in 6 months there's been such change. 6 months ago you had the the crypto market was down, but it wasn't down the level that it is now. It was the economic outlook still looked pretty good for property. Prices were still going strong in the UK, and in Ireland they're just going bonkers over here. America was starting to slow down a little bit, and people were talking about inflation, but they were talking about it with this term, what is it, temporary, or it was kind of, it was not going to be something that was going to be around for a long time. They thought it was kind of a temporary blip. And now we're into a situation where people are realizing, oh dear, we have a big problem here. And central banks in particular see this as a major problem, because inflation, if it gets into the economy, can destroy an economy, can actually destroy a currency. And we saw that happen in the UK just last week, with some real problems in the UK with all of a sudden we had a situation where the pound fell in value against the dollar by about 5% overnight. And suddenly the Chancellor of the Exchequer had to kind of reverse plans and change direction and everything like that. So what that did was spooked the markets. The UK, the pound, I think, is like the 4th largest currency in the world to be traded. And for that to fall 5 or 6% overnight is absolutely, catastrophic in terms of market turmoil. And now they managed to steady it, but what it did do was create a whole lot of panic selling, and the Bank of England had to step in and start kind of doing all sorts of stuff. Now, because the Bank of England have stepped in, everyone is now speculating that interest rates are going to start increasing, and they were going to increase anyway, because of the fact that when you've got inflation, the only way that central bank can fight inflation is by increasing interest rates. So we are looking at borrowing rates going up. Mortgages are going to go up. And so because mortgages are going to go up, people who bought a property, and usually people are hoping to kind of cash flow, a little bit cash out for themselves, that is going to be eroded away, and you're going to end up with a small wedge getting smaller and smaller and smaller. And it'll get to the point where people are perhaps going to go to the negative side, where every month they're having to support the mortgage rather than it throwing off a bit of spare cash. And this was to be expected because of the fact that interest rates have been historically low for years, and all of a sudden they're starting to increase, and they're increasing dramatically. Normally it's a much slower increase. Now, in addition to what we're seeing happening in the UK, there's a bigger thing going on around the world. Okay, so China introduced last year a thing called the 3 red lines, and what that was it was a way to kind of rein in the property market, and it was necessary to do it because it had gone kind of berserk over in the UK and in Ireland. We have got central banks that control the amount that we can borrow against our earnings. Here in Ireland it's like 3%. In the UK I think it's 4.5 or 5%. Or not 5%, 5 times your earnings. So you earn 50,000, the most you can borrow in Ireland is about 175,000 or 180,000, whatever it is. If you're living in the UK, you can do slightly more, it's like 5x. But in China, it got to the point where people had to borrow 40 times their annual earnings in order to buy a property. And so the property market in China just went berserk. And everyone was making billions, and these guys all were flying around in jets and stuff. And the communist government didn't like what they saw. They saw that the people were getting kind of left behind by the big developers, and so they introduced these 3 red lines, and they were like basically economic rules that you can't break. Soon as those rules got broken, they were kind of in trouble. So they all had to kind of change tack and change the way they work very, very quickly. What that has done is actually put China into the verge of a property collapse. And so just in the last few days, I was looking at the headlines, in the last few days, China has reversed its policy on those red lines, and it's trying to kind of support the market again. Now, question is, has the damage been done? Because you have all these groups now of buyers that have all started to rebel against the lending rules, and there was all these kind of crazy rules where you had to start paying a mortgage just because you reserved the property. You did not own the keys, you didn't even have a property yet, and yet you were expected to pay a mortgage payments. So guys have actually rebelled against that, which you would expect, but it took the Chinese, it took a while for this to happen. Now, another economy that's in big trouble at the moment is Turkey. Turkey is in deep trouble, okay? Turkey is a big economy in the European scheme of things. But what it's done is, it's Erdogan who is the leader of Turkey. He is this kind of strongman guy. He's almost like an autocrat. And what he has done is, he's just going against, conventional wisdom, and he's deciding that he's going to do what's popular rather than what's the economic wisdom that you should do. What he's done is, he's decided, even though this is back in April now, even though inflation was running at 20%, okay, we're all going crazy in the West because inflation is running at 8 or 9%. In Turkey last April, it was running at 20%. And normally what you would do, the banks will normally more or less match inflation levels with interest levels, and that will kind of bring it under equilibrium and drive it back down. He decided to go against that and decided to drop interest rates. So what that's done is it has spiked inflation in Turkey. And so what you're now looking at, as of the last couple of days, as of Monday, Turkey's inflation rate hit 83%. Okay, now 83% inflation means that every year everything has gone up by 83%. But what's worse is, because of that inflation, the Turkish lira has fallen in value against the US dollar by about 3x. So just imagine, I'm sure you're all familiar with us. We get into a car and we go and fill up at the tank, and it used to cost you £60 or €60, whatever. Now it costs you 100 or 90, whatever it is. Now, if you're a person in Turkey, what you're looking at is your fuel bill going from 60 or 80 or whatever to about 300 to fill up your tank. So it is absolutely on the verge of collapse. You're going to have people there out in the streets protesting over this, because they won't be able to afford anything with inflation running at that level. And usually when this happens, it spirals, and you end up with that going to 200% and then 1,000%. And what you had in Zimbabwe and in Argentina and stuff is, it goes into just this hyperinflation where it's like 1,000% a year, and you have to go around with a wheelbarrow full of cash to buy a loaf of bread. So it's that's what's happening in Turkey. You got China, you got Turkey, you got the turmoil in the UK last week. You've got in America, they've been increasing rates, and because they keep increasing rates, the property market there is starting to correct. So you're looking at a correction in the US market as well. And then on top of that, we've got Russia and Ukraine, and we've got Putin out there now talking about, like, they're actually moving nuclear weapons to the border of Ukraine at the moment. Now, could be a bluff, but they're talking about doing drills where they're going to have their soldiers running around preparing for the launch of a nuclear weapon. Now, when this kind of stuff starts to happen, you can imagine how markets react to that. And the fact is, if there was some sort of test, or if he decided to just use one to kind of show the West that he means business, wait for an economic meltdown, because nobody is going to be feeling safe in an environment like that. Now, hopefully it doesn't come to that and everyone is kind of pushing back, but he is very quickly becoming a guy completely isolated from the world, from the leaders of the world and stuff. Now, interesting. Okay, so let's think about what could happen in the with the market. Okay, the market, I've actually just been looking at some headlines, and they were saying that British, this is the Business Post, which is an Irish newspaper, comes out on Sunday, and there's a prediction there that British house prices could drop by up to 40% according to one analyst. And so that is something that's happening, and it's not surprising. Like, we in Ireland, we went through this big collapse back in 2008, and our prices collapsed completely. Now I'm looking at like figures and graphs for the UK pricing, and price to earnings ratio has really just crept up. And it used to be that whatever you were earning, 3x that would be the cost of a house. Now it's 7x that. So it has really shot up, and it's become quite unaffordable in certainly in historic terms. And so it would not surprise me to see a fall, and especially if you're going to be looking at interest rates increasing. And so house prices are definitely going to, well, I'm not going to say definite, but it does look to me like you're looking at a fall in house prices, certainly in the UK with the interest rates pushing up. Here in Ireland, I think we're probably going to look at something similar. Now, I'm going to go into some of the property basics in a little while. And the property basics are kind of like market demand, market supply, and then affordability is the big question mark. But I see in the Irish Times this week, they were predicting that house price growth in Dublin has significantly slowed, and it's probably because of interest rates. And what's actually happening, if you're paying attention to all this kind of stuff, what you're seeing is the cost of construction and all that stuff has been pushed up and up and up, and everything is more expensive now. Labor is more expensive. Materials are more expensive, they take longer to get here. All of this stuff has pushed up prices, and at the same time you now have interest rates being pushed up, so you have this squeeze, and it is making some projects less likely to work. And so there's going to be a squeeze on both ends, and I think we could be into a difficult situation. I'm just looking at some of the comments here. I see they can't afford to rent or buy. Yeah, I can see that. Your daughter, that is a problem that I think that we're going to see more and more of. And one of the things I saw in the papers recently was that the biggest hurdle to actually buying a property at the moment has been the high rental cost. So people are spending so much on rent that they can't afford the deposit on a property, and so this is a big issue. Interest rates are just going to keep on going whilst we have this inflation situation, and I think when you have an inflation situation the way it is, where it's gone from being close to zero for months and all of a sudden it's jumping up, you're going to have fallout from that, because people that thought to themselves, oh great, I'm going to get on the property ladder and I can just about afford this property and I can just about make these payments. You're going to do that at a certain borrowing rate, but that borrowing rate is going to increase, and so you're now going to be looking at a situation where rents, you might say, well, I'll just increase the rent. How many people can afford that rent? Because if you were looking at rents at the moment, and everybody in the past was paying so much in rent, rents have continually gone up over the last couple of years. But what you're looking at now is this other pressure coming on people. So the cost of living has gone up, the cost of food, the cost of fuel, the cost of energy for your home and all that. All of that is pushing people down as well. So yes, Paul, I actually think you're right. I think here we go again. I do think we're heading into an economic crash of some sort. Whether it's as bad as 2008 is very, very hard to say, but some people are predicting that it will be very bad. Other people are predicting that it won't be as bad. But if you think about what's happened in the last couple of years, we have gone from through a pandemic, when all the governments opened up the taps and started pouring cash out into the market. That cash flowed out, and when the cash flowed out, it started the inflation problem. And you cannot just simply switch off inflation. And it was transitory was the term that they were all using. That is gone now. People realize that this is embedded and we need to deal with it. And it's become the number one thing that they have to solve in the Federal Reserve in the US. And that is causing a problem, because the US dollar, they're saying, like, one thing that you can give the US when it comes to this kind of thing is they react very quickly when they do react. Okay, so the rest of the world, we're all kind of like tipping around wondering whether this will happen or not. But in America, they say they tear off the band-aid quickly and they say, right, we're raising interest rates and we're doing it right now. And so that's what they do. Now, by doing that, what's happened is, the problem is because the US dollar is the reserve currency of the world, everything is priced in it. So you have got like fuel, petrol, gas, diesel, everything like that. It's all bought and sold in US dollars. So if the US dollar is going up, it means that the dollar is strengthening in value, and it means that it's getting more expensive to buy all of these things. Now, if fuel has gone up, I filled my car today and it cost a fortune, and I'm just kind of thinking to myself, because the dollar is going up against the euro and against the pound and all this kind of stuff, it's pushing up the cost of the fuel. And if it pushes up the cost of the fuel, what does that do? That contributes also to inflation. And so the inflation actually gets worse. And so when inflation gets worse, then the banks have to increase interest rates to counteract that. And so you're going to get into, like, we go back, it's hard to believe, but we are currently at levels of inflation that have not been seen for 40 years. Now, 40 years ago, what were interest rates? I can remember, like, when I was a kid and my parents were paying a mortgage, interest rates were 14%, 18%. So could we go back to that? people would sort of say, oh, you're crazy, you're being alarmist, suggesting that. But it is actually possible if inflation becomes so embedded in the economy that you can't fight it, that it is actually possible that this could happen. Now, I see Kevin talking about buying Bitcoin, solve all your problems. That's interesting, but you know, if you went and bought Bitcoin during the boom when everyone was buying in at 60 and 70, you're going to have a situation where you're now looking at a basically an 80% fall in the value. So you got to be very careful with the type of assets that you go and buy into, because that kind of volatility can completely mess with your mind and people can get depressed and all that. I believe there's actually clinics now that are dealing with crypto investors that have lost 99% of their value, and they've all gone into like deep depressions, and they're trying to deal with this as if it's like a drug addiction or something. So there's also a lot of, Paul is saying, a lot of zombie companies out there. Yeah, absolutely. Yeah, I'm just answering a comment here from Kieran. Do you see young people still buying 3-bed semis in 30 years time, or will we shift to apartments? That is a very interesting question, Kieran. I will tell you a couple of insights. First of all, most people, when they, like young people, I think they do like the idea of apartments, okay? They're clean living. You move in, you have a balcony, it's all very easy. As soon as you go and buy a 3-bed semi, you are into garden maintenance, all that kind of stuff. And I think those days, I mean, if you have a kid, as soon as you have children, that becomes the new norm, and you start thinking, I'd like to have a garden for the kid to run around and all that kind of stuff. But when you're young and you don't have children, then I think apartments are probably the way. Now, in addition to that, we have the problem with densities in the various parts of the world. There is not enough land for building these properties. And if you go and keep on building 3-bedroom semis out further and further and further, you end up in a situation where it takes you, hours to get in and out of your work, because you live so many miles away. Whereas if you're in an apartment building living on the 40th floor or something like that, you can have hundreds of people living in that same small footprint of an area. And when you have that, it also means that your transport links are much better, because now you're in a situation where you walk out the door and you've got 400 people getting onto a bus or a subway or whatever it is. What's my take on buy-to-let? Buy-to-let, I think, is, I don't think, at least, see, the thing is this, okay, and actually I'm going to keep on going with the presentation that I had in mind here, because it's going to answer a lot of your questions. All new builds in Dublin 8 are apartments. Like you're not going to see anything other than apartments, hotels and student accommodation in city centres. First time buyers trying to compete, it's impossible. Like what you've got at the moment is you've got a lot of these big schemes are being funded by international investors, like big funds are coming in and they buy the entire scheme. And the reason they're doing that is because funding of apartment development has become almost impossible. The cost of construction and the cost of all of these things has pushed it up to the point where there's no profit in building a building, say building 100 apartments or something like that. You build 100 apartments, you put them up for sale, and you want first-time buyers to buy them. You will lose money on that trade. Whereas if you go and build 100 apartments, you can go and sell it to one big fund who comes along and buys all 100. It's one transaction, and they'll give you a big profit on it. And so that is something that is that's one of the things that we're pushing against at the moment, and that's why apartments and houses, there's such a difference. Let me see what else. Another question. Either that or pre-sale deal where blocks are being bought off the market. Yeah, that's what's going on at the moment. Is it a good time to sell? I think it depends. Like if you have got a lot of borrowings, then it's probably a good time to put the thing up for sale, because you're going to find that your mortgage becomes unaffordable in the next little while. Now, having said that, I've got various clients that I work with kind of on a mastermind coaching and stuff. And those guys are all buying at the moment, and they're buying because they're able to buy specific properties that actually are going to go up in value. And I'm going to go into some of that and how to do that today. Let me just flick on through what I've prepared here. So how do you prepare? Just in terms of some of the basics, right? Historically, when you're in a high interest rate environment, or a high inflation rate environment as we are, you're going to get into a situation where property has traditionally been a good hedge against that, okay? If you increase your rent, then obviously you're able to fight inflation. One of the problems we have today is that the local authorities and stuff are bringing in rent control zones. And that means that when you want to go and increase your rent to match, say, inflation, you're no longer able to do that. What happened was we had a situation where you could just increase your rent by 100, 200, 300, whatever it was you wanted to. Now you're limited to a percentage increase and it can't go above that. And there's all sorts of rules, and these guys are actually watching you, and you'll get fined if you break those rules. So you need to be careful about that. Mortgage at the moment, the people that were buying and having a mortgage and stuff like that, they were paying down slowly, and that was always the traditional way that you could be paying $1,700 a month in rent, but you might only be paying $600 as a mortgage payment. The only thing that was preventing you getting there was having the deposit to buy your first property. So construction has increased, supply chain delays, labor shortage. All of this has pushed up the cost, and it has also made certain projects slightly less viable. And so there's a big risk out there now that some of these projects will actually be shelved. Housing, I think, like semi-Ds and things like that, you'll always be able to sell them. They're not only are they popular with buyers, but they're also much easier to build in terms of construction. Building a scheme, like I'm in the process in the company I'm involved in, we're building 54 units in Shankill at the moment. Now the 54 units that we are building, those 54 units, so many of them are houses, and the houses are just, we build them very quickly, we can sell them very quickly, you get the money back in quickly. If you're building an apartment building and say you've got 54 apartments, you've got to build the entire building. It has to be complete and carpeted and painted and everything, and only then can you actually let people move in and can you start collecting the money. So you have to get 100% completion or thereabouts before the money starts rolling in, and so the outlay is massive. You might have to put out borrowings of 30 million or something like that to build an apartment building, whereas the same number of houses your peak borrowing might only be 4 or 5 million, because you'll be borrowing money to build the first phase of houses, and then you sell those houses and you build the next phase. So you're never at maximum borrowing level. Now the problem is inflation. As I've gone in, I won't go on too much about it, but if we get into a situation where interest rates go from where they have been 0% and they start jumping up to 8%, 9%, 10%, like who's to say it can't hit 10%? If it does, be prepared for a massive correction in the market, because so many people are just not going to be able to sell their properties. And I remember I was only a young guy at the time, like in my teens, but in the 80s, in the late 80s, I remember in the UK there was a crash and everybody started. I'll have a look at the chat now in a second, Selena. I don't want to get myself off my train of thought. If you are into those kind of rates, you're going to have a big correction. And back in the 80s, we had a situation where there was just an entire generation of people ended up in a situation where they were in negative equity, and they were in negative equity for years. They bought a house for 200,000 and it fell in value to 150, and your mortgage might be 160,000 or whatever. So you've got a mortgage of 160 and your property is worth 150. If you sell that property, you're going to have to go and find another 10 grand to give to the bank. And that's the situation that they were in. So most people were stuck, they couldn't move, they couldn't do anything. And that persisted for quite a few years. And it was because borrowing rates shot up to the tune of like 16, 18%, and people were just completely tapped out. And if people that are buying property, they're always buying it at the level that they can borrow at. So if you're getting 1,000 a month rent or 2,000 a month rent, and you're getting in, say, 1,500 a month as your mortgage payments, you have enough just to kind of cover one another. That's fine. But as soon as the rates start increasing, you'll end up going negative. And as soon as you go negative, you're stuck, because the value of the home versus the value of your loan is usually reversed, and so you're actually into a situation where you can't walk away. The only place where they allow you to walk away is in the US, and what you do is you just give back the keys and you walk away, and they'll write off the debt. But I got chased here in Ireland when that happened to me in 2008, and they came after me for the shortfall, even after selling the property at, below the amount of the loan. Now, before I get on to property basics, I'm just actually going to read some of the comments here in the YouTube. So hold on a second, bear with me. So let's have a look at the chat. Now, if I could find the chat, it would be good. Let's have a look at live chat. Okay, so we have quite a few comments. Thank you for your messages. Okay, how are we? Hey Gavin, looking to sell my house on Alpha Kenny Body, 13th Street in Coolock. Would you be able to help me get some? Okay, well, I can't answer that right now, Robbie, but I will certainly have a look. Would you agree that being a full-time developer is a job as opposed to a business? It depends, Sonny. If you get into a situation where you are able to build your team, see, it's all about scaling, and that's where, this is one of the things that I go through with my clients, is that when you're getting into the property business, you're buying something and you're trying to add value. If you just buy a property and sit on a property until it rises in value, all you've done is just sit there and the property market has gone up and you've risen up. But if you want to buy more property then with that new profit that you've now got, everything has gone up in tandem with the other property. So you're not getting the benefit. The only way to really make money is to buy a property at say 100, and whether you extend it or add it or improve it, or you change the use of it or you actively manage it, whatever it is, there's different strategies you can use, but you turn it from being valued at 100 and turn it into being valued at 130 or 150 or whatever it might be. Once you've done that, now in a short space of time, you've created all this extra value, and with all that extra value, you can now go to the bank and you can free up that value, you can redeploy it into a new deal. Now that works well, but you're limited by the speed at which you can work on a project and stuff. The better solution is to start bringing in investors, external investors that can actually work on all this, because it allows you, instead of working on one deal, you can do 4 or 5 deals at a time, and you might have them at different phases. So one of the best things about doing 4 or 5 deals is deals can take time, right? You go and invest in one deal, and maybe it's a property deal that has, you're at the very start, you have to go and build a house, construct it and all that kind of stuff. That's going to take you the best part of a year. You might buy a piece of land and you have to go and get planning permission. If you do that, that's going to take another 6 months or whatever to get the permits and stuff like that. So projects can have these like long timelines. And if you're getting into a timeline like that, it's going to take you maybe 18 months until you get your money back. What you want is to have projects at different phases, so that while you're buying one, you're completing another, and you're in the middle of planning on a third, and you're in the middle of construction on another. So you now have this kind of like a conveyor belt where the deals are coming in one end and they're going out the other end, but they're not 18 months apart, they're about every 4 or 6 months apart. Now, you can't do that with your own resources sometimes unless you're going out and finding and bringing in investors. And that's why it is an area that I focus on, is being able to pitch to investors, able to get the investors onto your team, and then you can expand your team. So using what Sonny was saying there, if you're in a situation where you have, it feels like a job. Yes, I totally understand that it does feel like a job when you're in this, because you get to a point where if you're a one-man band, it is just it's all you're doing. It's like being a hamster on a hamster wheel. You're just constantly on the go. But as soon as you have the scale that allows you to bring investors in and start to expand your team, then it becomes more like a business. So let me go back to the live chat and see what we have. I would have to disagree with you with that, Sunny. Okay, that's Sunny. Jerry was saying that I was at Handelsbank's stock market seminar yesterday. They believe, as I do, that it was actually hyped up worse than it is going to be. Okay, well, Jerry, I'm all ears if you think, but I've been watching the market, the world, and I just think that we're on the verge. And I think the bit that nobody understands is, what is Putin going to do next? And if he does something drastic, that could have a really, really negative effect. where next minute the war expands into NATO and stuff. So many things which I'm realizing about the industry is that it is impossible to have staff manage your projects so that you can exit the day to day. Well, Sonny, you really have to obviously build a very, very capable team. And sometimes that means hiring people that are better than you in certain areas, or even that demand a salary that is greater than you're maybe willing to spend at this moment in your career. So it can be difficult. That's where I bring in professional teams and I just get them to run it for me. I hired, when I was running a development management business back in 2005 and 2006, I brought in a very, very senior architect, and he was kind of the guy that was running the show for me. And I can remember his salary was probably twice what I was paying myself, even though I was the owner of the business. Let's see, we have my friend Ethan is a landlord, and a price range of 500 to 750. Well, yeah, I mean, look, there's a lot of different prices out there. More projects. Okay, let me have a look at some of the rates over here. So we're on TikTok and we are on YouTube, and I'm trying to manage chats on both. So self-admin pensions are non-recourse, so you can walk away. Yeah, but the whole idea of a pension is that it's there long term. So and actually they can't touch it on you. So yeah, I mean, definitely it's a way that I funded a few things using my self-administered pension. Is there a likely decrease property prices will be wiped out? I think, well, rates are going to go up for sure. I think that's pretty much a guarantee with inflation running it the way it is. Interest rates were at around 5% before 2008. Yeah, I can remember. They will return to that. Yeah, I think so, Jerry. All right, look, I'm going to get now into the market drivers, just for the people that are listening that are kind of interested in what's driving the market, okay? There are three things that drive the market. There's the supply, there's the demand, and there's the affordability. And those are the three key drivers of a market. And if you're able to keep an eye on both of them and monitor them and track them, you can kind of predict what is likely to happen next. Now, it's never that easy, but supply here, looking at, I'm going to use, say, the Irish market and the UK market as the two examples, okay? You've got your national requirements, and that is, you know, the birth rate is running at the level that it is. Old people are living older because of health and all that kind of stuff, and so the population is kind of getting older, but it's also getting larger, and so you're going to have a need for houses to continue to be built, and that has been a problem, and that's what's been driving up a lot of stuff. You've also got the impact of the COVID restrictions last year. That pushed down supply because everything was restricted for a period of time. Now, also, we've got to remember that even though it's 2008 is now 14 years ago, we're in a situation where 14 years ago we had the 2008 market crash. And what that did was it turned the market completely on its head. Now, less so in the UK than here in Ireland. In Ireland, we had nothing built for a period of 6 years. And in that period of 6 years, a huge amount of the construction, the professionals that worked in the construction industry, they all moved abroad. When they moved abroad to another country, they don't come back typically because they lay down roots, they put kids into schools, they do all that kind of stuff. So there's a huge amount of contractors that went back home to wherever they were living. There's a huge amount of professionals that might have moved to Australia or wherever, Canada, where the market was doing better. And so what that did was it pushed down inventory levels. And we're at a situation now where we're unable to get back to the level that we were producing at the time. Now, here in Ireland at the moment, we're producing 30,000 houses a year, but we need 50,000 just to meet the current demand. And so in the UK, it's a very similar figure. When we have a look at the actual house completions over a period, I have a graph in front of me here, and it goes from 1960 up to 2016. So that's 60 years or 50 years. And during 2003, 2004, it went up to 90,000 units here in the Irish market. And then in 2012, it fell back to 12,000 units. So what you're talking about is 1/10 of the demand now of the supply. And that has created this problem where supply cannot be met in the Irish market. And the UK market does suffer something similar. Now, when you go and look at demand is being pushed up by all sorts of things. It's been pushed up by the age of the population, by migration into the country, and also what we've got as well is we've got the war in Ukraine. Ukraine has pushed 5 or 6, or even at this stage I think it might be 8 million people out into Europe looking for places to live. And so if you're living in parts of, rural parts of Ireland and stuff like that at the moment, the place is surrounded by Ukrainians that have actually been housed there temporarily perhaps, but that is what's happening at the moment. Now, the Irish, back in June I think it was, the headlines came out after the census. The Irish population hit 5.1 million, which is the highest level in 171 years. So we're now at the highest. So the population has outstripped the ability to build houses to meet the population. And that is one of the big reasons that we're in this big problem. In 2016, we had a population of 4.7. That was the last census that we carried out. Now we have 5.1. That's a 7.6% increase, or an extra 360,000 people living in the country now that weren't here in 2016. And if you just divide 360 by the 6 years that's taken, that's about 50,000 houses a year or thereabouts. And so you're looking at, or even more, it's about 60,000. So you're looking at 60,000 people that need now. Obviously you could have people cohabiting and living in, and there could be children there that belong to the same family, but it's a negative. It's pushing things beyond. In addition to that, emigration versus immigration is a big driver. Now, when people say that, well, last year only 30,000 people came to live in Ireland, we'll say, okay, but of the 30,000 that came, that's the net figure, that's not the total figure. What actually happened was more than 80,000 people came into the country, and at the same time 50,000 left. So the 30,000 is the net figure positive that actually came into the country, but it was 80,000 arrived, 50,000 left, and the 50,000 that left, an awful lot of the time those are people that they've reached, they're 20, they've just moved out of home, and they're going to go off and travel the world, or they're going to go and move to another country and see how they get on over there with building a career. The people that are arriving here a lot of the time are professionals that are settling down because they got a new job. They need homes, they need schools, they need all that, which is why we're in the situation that we're in. I mentioned the Ukrainian situation. That is the big one. So you've got massive undersupply, massive over demand. That is the equilibrium that we have been fighting for the last couple of years. And that is why rents just keep going up, why house prices keep going up. The big question now is the last of the three things. I mentioned supply, I mentioned demand, affordability. The only thing that can actually put a halt to all of this is affordability, and that's down to will the interest rate hikes and the borrowing costs, will the pushing up of all that, will that cause you to be in a situation where you're unable to afford to buy a house? The landlord that bought the house is now paying more, but he can't increase his rents. Why? Because the rent is being restricted by rent control zones or whatever. So he's now perhaps at a loss. So he decides it's time to sell the property. When you sell that property, it's going to go back into the market. Probably it's going to be bought by a family rather than an investor. One of the things that I'm seeing a lot of people doing are turning houses that are for like families and stuff into multi-unit homes, like a HMO, house of multiple occupants. So you go and find yourself a 3-bedroom house, and instead of renting it to a family that wants a 3-bedroom house, what you do is you maybe extend it, convert the attic, do various things like that, turn it into a 4 or a 5-bedroom house, and then rent out each room just as a unit on its own. Maybe you can put an ensuite in or whatever, but that is what a lot of people have started doing. And instead of getting $1,500, $1,700 a month from one family, they are now being able to get $3,000 a month from 5 or 6 different people, all paying $500, $600 a month, or whatever it might be. So that is something that I'm seeing, and that is actually very popular because of the fact that affordability is such a problem that rather than trying to rent a house for $1,700, people are out there looking for, let me find something that's $500 a month, and I'll just move into a room, save up for as long as I can save up my deposit, and then I'll go and buy a property when I have a chance. Also, central bank rules are a big issue. If you look at the central bank these days, they have all these limits on what you're earning is a multiple of how much you can borrow. So just beware of, with the market, I think, too much leverage with people. People got into a false sense of security over the last couple of years with rates running at nearly zero for so long. It's very, very easy to forget that rates will eventually come back. And as Jerry pointed out, the rates are going to go to probably back to 5 or 6% at some stage. And when it goes back to that level, that might be the norm again. Like there's all of these norms that have been going for 50 and 100 years and stuff. And we've been way off the norm, or like outside of the mean, for a long time. Now, usually it corrects and it goes below, and then it'll eventually come back and it'll revert to mean, or whatever they say. Political pressure is one of the issues that I'm watching, because if you get a change of government, what they want to do is obviously do something. They'll launch some sort of a party manifesto, and what they'll do is whatever is popular. So they'll come out and say something like, we've got to reduce the price of housing for our young people, and that'll be a very popular topic. They'll get a load of people to vote them in, and then what are they going to do? Are they going to go and suddenly tax landlords so landlords can't, buy properties? Really, it's difficult to see. Affordability and liquidity, from Paul here, are going to be seriously impacted. Absolutely. I think you're right. I mean, I think one of the big things you got to be careful of here is we're getting into a situation. Mindset is everything, okay? We're getting into a situation where if the market turns negative and you've got cash put aside, you're going to feel like you're in a much stronger position than most people. If you're in a situation where you're now losing money and you're getting worse and worse, that's going to play on your mind, and it's going to make you do silly things, and it basically pushes people into doing kind of desperate stuff, and like going on putting money on the horses and like buying lottery tickets and stuff like that. You've got to kind of try to get your mindset in the right place. So make sure you're not over leveraged. Be checking that if you have a property that you can sell and release some equity now, do that. Or if you've got something that is producing, say, only producing so much rent, but if you were to split it into multiple units, you could actually get a lot more. Have a look at that as an option. Now, we have to be careful about some of this stuff, because there is currently in the Irish market, there is no restrictions on HMO. There's no building regulations around that. In the UK, they have it quite strictly monitored and and there's regulations around how you do a HMO. In the Irish market, we don't. And because of that, there is always a risk that the local authorities will come along and they'll say something like, okay, we think it's now time to go and regulate this market. And once you do that, that could throw a bit of a spanner in the works. So be careful. One of the things that I recommend is that you take the building regulations from, say, the UK market and apply them to whatever you're doing in your Irish market. And the reason is because typically when people are looking at bringing regulations in, they will not bring regulations in. They won't write them from scratch. What they'll do is they'll borrow them from somewhere else. And so typically what's happened here in Ireland is that they go and they get the UK regulations and they say, right, take UK regulations off the top, put Irish regulations on the top, and that's it. There's our new. And what they'll do then is they'll launch them, and after they get various feedback over it, they'll start to make various amendments, and there'll be certain things that apply in the UK that don't apply here. They'll get cancelled out, but that could well be what you end up being forced to do. So just be careful if HMO is an area that you're in at the moment. I think one of the things to just bear in mind is that the supply-demand issues means that there's always going to be a need for housing there. The problem is the affordability. So if you find some way of getting in, I think the price, you're going to get in at a low price, and if you can manage to tread water until until things stabilize and get back to normal, you will make a lot of money. Like, the one time to make money is during a recession. If you can get in and buy at depressed prices, you'll make an absolute fortune, like a couple of years from now, but it's going to be tough. So don't go in think it's going to be easy. Steel your mind, get yourself sort of mentally set up for a tough ride, that this is going to be a bit of a roller coaster. It's going to be tough, but if you can weather that storm, you're going to go and 10x your money in the next couple of years. I'm just going to talk about some of the final steps. I've got 6 steps that I think you need to figure out before you're able to kind of get into property. The first one is understanding the fundamentals. Okay, like, why do people invest in property? What do they invest in property for? What are the benefits of investing in property versus some other asset? All of that stuff. Like, go and figure out how you do that. Now, this is something that I talk about over on my channel, my YouTube channel and stuff. But if you are able, if you got a good handle of the fundamentals, then you're going to go into the market well sort of prepared. You're going to understand what can happen. You're going to understand why things are done a certain way, and you're going to understand all of that. That's a key to it. Understanding the fundamentals. Understanding the fundamentals around location, around borrowing, around all that. Risk versus reward is the next step. Understanding risks, okay? How to rate your deal. If you're looking at a deal and it has a certain amount of risk attached to it that you're not aware of, you could be walking blindfolded into a big problem. So you've got to understand and how to limit your risks or how to mitigate risks. We have a comment here from, I want to be rich and I have 14 euro. Yeah. That's going to take you a little bit of time, but it can be done. You just have to, first of all, it's a long road and you've got to obviously put the work in, but it's a marathon, not a sprint. People who rush in, okay, one of the things, I've looked at crypto over the years. In fact, I had friends that were buying crypto back in 2011 and I had an opportunity to buy Bitcoin at $93 per Bitcoin. Now, obviously it went to 60,000 and it's back at 18 or whatever it's at today, 20. I could have made 3 million or whatever if I put $5,000 into it. Do I beat myself up over not doing that trade? No, because the day after I bought it for 90, I would have bought it for 90. It went to 150. Maybe I would have said, "Oh, that's great. I can get out and I've doubled my money." And you would have been in and you would have been out, and you would have thought to yourself, "Oh, I can't buy back in now until it drops back again." And it just kept going up. So these are things that don't cry over spilt milk. Just move on, and that's all you can do. Hi from Kurdistan. Wow, we're getting out to a lot of people here. The next thing I'd like to say, talk about financial analysis. Okay, one of the things you really got to figure out is how to financially analyze a deal. And it's not difficult, but there's a certain methodology that you've got to follow. And what it is it's understanding comparable evidence, first of all. So the stuff in your neighborhood, you've got to go and figure out in the neighborhood that you're in, what are the prices for similar sized property, for larger, for smaller, for better quality, for larger rear garden versus a south facing rear garden, and all that kind of stuff. Debt and financing, that's a big thing. Understanding how to go about raising debt. Now, not just talking about going to the bank and borrowing money. I'm talking about being able to raise investor finance from, say, an investor or something like that. Where am I from? Dublin, Ireland. And who does my mastic work? Wayne, I'd have to know you better to answer that question. The finding and negotiating. Hey, it's one of the biggest things that you're going to need to do is figure out how to go about finding property deals. And if you can find a property, like the thing is to set your expectations, okay? If you start buying property at a young age, like I have a client who works with me and like he's an incredible, he's done incredibly well, right? At the age of 14, he left to become an apprentice with his father as an electrician. And he just went and he bought his first property at the age of 18, and it cost him nearly everything he had saved up to go and get in, but he got in on the ladder and he's built it up over time. And what he's done is he's taken his construction knowledge and he's just continually added to his portfolio. And what he does is he buys a house, maybe it's a 3-bed, and he'll go and he'll do a small extension out the rear, make it into a 5-bed, convert the attic, make it into a 6-bed. He's now renting those 6 rooms for $700 or $800 a month. And so he has, at this stage, he's got multiple properties with about 70 or 80 people living in them, paying him rent. Now, do the maths. That's about $50,000 a month coming in income from 70 different tenants that he has. And does he look after it? Is he, driven mad, running around like a headless chicken? No, because he pays an agent to look after all of the headaches. So he pays an agent, I think it was €45 a month per property, or to basically look after all that stuff. And who are we talking about? We're talking about a client of mine. And then we get to the, when it gets to the point that you're going to be buying your first transaction, you've really got to there's a point where you got to bite the bullet. You've also got to be thinking ahead. You've got to be thinking to yourself, okay, if I go and buy now, what are the risks of the market in the interest rates increasing and catching me? You always got to make sure that you've got more than you can and more than you need. Like for example, if you buy, say, let's just use the example of buying a property for say 100,000, okay, and you're borrowing money, and say it's costing you 1,000 a month in mortgage payments, okay. You want to make sure that you're earning at least 2,000 a month from that property, if not more, because I think rates are going to increase and you could end up in a situation where it's getting close to 2,000 a month for the payments because rates are going to increase and they're going to keep going. Now, what I have, some of my coaching clients, one of them in particular, he's been buying properties in down in the country, rural parts of Ireland, and he goes in and he's bought it and he's managing to get like a 15% yield on some of these properties, 17% yield. And so comparatively to Dublin, if you buy a property in Dublin, you might be looking at 5% yield. He's getting 15 to 17. So that's the kind of thing. What should I do with my inheritance? Well, depending on the size of it, keep it safe. Don't go blowing it on a car or lifestyle or anything like that. That is your opportunity to build a nest egg. And really, you know, one of the biggest problems I think, and this is something just I'm going to close on, is comparison. Okay, be very, very careful. You got to develop a strong mindset. Don't compare yourself with others. Don't compare yourself with people of a similar age, living in the same area, all of that kind of stuff. As soon as you get into that game, you start making sort of competitive decisions that, oh, I'm going to try and, that guy's earning, you know, how did that guy buy that car? I should be able to have a car that size. And you start playing competition with this person. The way to think is, I've got my goals. I know which direction I'm heading. I know what the future holds for me, and that's my plan. I'm going for that. And I'm not going to allow all of this kind of comparison with other people to divert me from my path. Because next minute you'd be changing your car because somebody else who you perceive to be at your level has just upgraded their car. And now you think, oh, well, it's not the sensible thing to do financially, but I don't want to feel left behind, so I'm going to do it too. And what that does is next minute you've gone and you borrowed more money than you need to for a car that's falling in value. Instead, you could have a property sitting there producing an income, and the income that comes from that can produce another bit of income. Now, I don't know why my app has suddenly gone. I think I'm about to get locked out, guys, so I'm going to call it a day. I hope you found this. Yeah, I'm going to come back. I'm going to do this every week. That's the plan. So I hope you guys found this useful. It's been about an hour. And so signing out, Gavin J Gallagher is my handle on social media. Go and check out my website, gavinjgallagher.com, and check out my podcast if you haven't listened to it already, Behind the Facade podcast. It's all about property investing and real estate. Wishing you guys a great day. Speak to you all soon.